Good morning, America. Good afternoon from Germany. Here's Pascal. It is Tuesday and it is my favorite trading day because it is CPI day, Consumer Price Index. We will probably get a lot of volatility depending on the outcome of the news. And we already had a lot of volatility in the previous days, so I'm curious what will happen today. But let's prepare. We have 15 minutes until the news are out. So let's go through the news which happened in the previous days because the weekend wasn't really relaxing for the Federal Reserve. And yeah, probably you know the most, but I want to show you some interesting charts here just to prepare you for this market today. So let's begin here with our economic calendar for you in English, of course. So today is CPI news in about a quarter, and we will have the forecast here of 6% annual value and 0.4% month-over-month value. So let's see if we will hit this number here. I will show you the expectation from Inflation Nowcast, and here we can see the Cleveland number. They are a little bit earlier with their numbers, so we have a little bit like a projection here for March. So let's see here the inflation number year over year. CPI is 6.2% for the February number, so we are comparing the February numbers here, and this one is 6.2%, so a little bit higher than the expected 6.0%, and the monthly number was 0.4, and here we see 0.45. So the CPI numbers can come in a little bit higher, and it would still be about in line, because you know the whisper estimates are probably a little bit higher than the forecast because of these Cleveland numbers here, which can indicate as an early indicator. So yeah, we will see what how the numbers will come out. But I think if we are between 6 and 6.2% with the year-over-year number, then it can still be positive because the whisper estimates are already at 6.2%, and everything below 6% will cause a rally here. Let's see the interest rate expectations from CME FedWatch tool. Next week, Wednesday, we will have the next Federal Reserve meeting with the interest rate decision. And we had the biggest shift I have ever seen in this CME FedWatch tool. You can remember probably from my last stream last week, we had an expectation at day's end, I think it was Wednesday or Thursday, we had 80% probability for 75 basis points. This was just crazy. And now, that was the biggest shift I've ever seen. We are now down for 0%, 75 basis points. Look at this. 1 week ago, there was 69.8%, so Tuesday last week. And the highest number I've seen was 80%. I think it was Wednesday evening. And now we have shifted to 72% for 25 basis points move, and 28% believe in zero interest rate move. So just a pause and a halt in the interest rate hikes. So this is interesting because if we look back 1 week ago, nobody expected this. Even 1 month ago, nobody expected that there will be a pause in interest rate hikes. But because of the news with the banks and the trouble the Federal Reserve has gotten into, we now had a big shift here. So if we compare this again, you can see the change in the bars here for this 25 basis points move. And now it shifted to 73% right now, and even to a 0% move for 27% probability. So I'm still expecting 25 basis points. Why? Because, okay, 75 basis points, I didn't believe this the last week, but this is now out of everything. This won't be happening. But 0%, what would this mean if the Federal Reserve would come out and say, okay, 0% interest rate move? What does this mean? They would say, okay, we don't care about inflation anymore. The inflation is still around 6%, so it's too high. So they have still to go higher with the interest rates. Of course, it's a problem for the banks, but they tried to solve this problem by saying, okay, now you can give us your bills and bonds, and we will lend you money for 100% of the initial value, so for nominal value. And therefore, the banks can get liquidity. So this issue should be solved, and therefore they shouldn't get out and say, okay, no more interest rate hikes for now. This would be a bad issue, because then they would signal the market that they wouldn't care about inflation anymore. Therefore, I still believe in 25 basis points for next week. Let's see the treasury rate for the 2-year treasury rate here. And we see the interest rate level was 5% last week. 5% for a 2-year treasury bill here. And now it shifted down to 4%. So it dropped by 1 percentage point in just a week. Can you see this? From 5% to 4% for a 2-year treasury in just 1 week. That's crazy, because the inverse is what happened with the price. The price jumped higher. In the previous weeks, it dropped because of the higher interest rate expectations. So the 2-year notes and the 10 years and even the 30 years, they dropped in value because of the higher interest rate expectations. And now we had the biggest shift because of lower interest rate expectations, and now all the bills and notes are rising in value, and we see lower rates here. That's crazy, and yeah, we will see what will happen here later. But okay, let's go forward. We have we have 9 minutes left for the news. So these are the bottom performers from yesterday and Friday. So all the banks here. You see especially the regional banks like First Republic Bank lost more than half. Yeah, it's just crazy. They lost more than half yesterday. There were several trading halts when on the move down, and then they moved up again. It was just crazy. They doubled in price again. I think they were at lows of $11 or $12. We can see later in the chart. But you see a lot of banks here, Signature Bank, which was closed by the Federal Reserve, and all the others, they lost big here in double digits. And yeah, you see how everyone is in fear with the banking sector, and that's never a good sign for the market overall. And therefore, the Federal Reserve had to act, and they went out on Sunday before the market opened and said, okay, now all the deposits are secured, because if we wouldn't do this step, everyone would run to the bank, especially here the smaller ones, the regional banks, and would get their deposits out and bring them to another bigger bank, or just get them at home. And there would be a bank run. This would be the worst situation they could have. Therefore, there was no other possibility than doing this. And it was the right thing, I think, because yeah, now it's a problem for the stockholders and the bondholders, of course, because these stocks will be worthless. They are in a trading halt right now for Signature Bank and Silicon Valley Bank, but they will open as penny stocks maybe in a few days or weeks, of course. But yeah, that's it. But here are some more interesting charts before the CPI news are out. So the Fed tightening over the past year is an unprecedented in terms of size and pace. Why? Because look here. The previous interest rate hikes, we had 4% interest rate move here over 30 months, 4% over 84 months, 4% over 24 months, and 6.25% over 54 months. And now we had 6.75% over just 14 months. That's crazy. And you see, every time at the peak of the interest rate level, we had a recession. It's not possible to have no recession with these high and steep interest rate moves. It's not possible. We will for sure have, at least in the third quarter, maybe already in the second quarter, a recession. And for sure the stock prices will have to drop. But before this happens, probably we can see higher levels at the stock market. Because if we look back to 2008, to the financial crisis, what happened when the Federal Reserve went out and said, okay, we will bail out everyone? What happened? The stock market rose 13% in the next week. 13%. So, therefore, don't short too early in this market. It will be volatile. We will see a lot of volatility. But please, don't go in full size with shorts. It's not the time to short right now too early. Here we see the money funds, so the total assets in money managed funds. And we see a record volume of $4.9 trillion in money managed asset funds. So, what is the problem here for the banks? The banks normally work with the capital, so they take deposits and they lend the money for higher interest rates. So there they can make a profit. But now, because the interest rates are so high, the people say, okay, I don't want to give the money to my bank for just a couple of bucks. I can go into a money managed fund and then I can earn high interest rates. And therefore the banks get a problem because the money gets pulled out of the banks. Yeah, it's not available for them. And therefore they have liquidity issues, big liquidity issues. And this is what caused the Silicon Valley Bank to go down. Yeah, it was not a thing of bad assets they had like we had in 2008 because of the value of the assets. Yes, of course, the T-bills and the notes, they went down in value, so they had big losses, but they could just hold until maturity. This wouldn't be an issue for them. But they don't have the time because there were issues with the tech companies, so they lost money, they needed more money. They pulled out money of the bank, and therefore there was a liquidity issue. And this caused this bank run. And the problem is not saved yet, because you see, this is the first time since 1948 that the total deposits on US banks is dropping. And this has never happened. And this is a big issue for the banks, because in terms of liquidity, they need this money to make the profits, to need their business, to make business. And if the deposits are pulled out of the bank, then they get illiquid. It's not possible to do the business anymore. That's it. Okay, let's move to the market. 4 minutes left to see our important levels here. Let's go to Nasdaq. So it's trading sideways around the 12,000 level. Was already an important level yesterday. Yesterday there were big moves. We had 1.4% higher when the market opened during the Asian session, and then we went lower during the European session and had lows on the opening of the US market at 11,677 points. So from high point to low point, this was 3.3% down and then up the whole way again. Just crazy, these moves yesterday. And yeah, we have to prepare for what's coming next. I don't expect that the market will shift here again 300 points, but of course this can happen. Therefore, let's see the important levels. So I have drawn a Fibonacci level, like always, from the previous high to the previous low of yesterday. Therefore, we'll see the Fibonacci retracements on the higher levels and also the support levels on the lower side here. So if we go again on the lower level, we see the Fibonacci level here was right after the European opening here at 11,870 points. This was support level, and it should act again as a support, 11,875 points. So this wasn't reached tonight during the Asian session, but this should act as a support. Next support is the previous low here from yesterday, 11,677. But look at this candle. What a huge wick here. But we tried to retest and then we had the green candle. So yeah, there is a lot of room to the downside. If we will see higher than 6.2%, then probably we can also retest to the downside here. But what I'm expecting is to see 6.1, 6.2% inflation rate here for CPI. And this will maybe cause 100, 150 points to drop here in Nasdaq, and then to see a rise because the Whisper estimates have already been at 6.2%. Therefore, it's not really bad. But if it's higher, then we can see more dropping. And if it's lower than 6%, then we can also go to the upside. So probably retest the previous highs. As you can see, the 50% Fibonacci is right at the high point of yesterday. Now you see why it's working again, because the high point is important and the 50% Fibonacci level will be important. 12,084 points. So this will be important. And if we look on an hourly time frame, we can also see the higher level here, 12,179 points. This should also be important, and 12,300 points. So yeah, if we will have a party, then probably this could be the target, 2.2% to the upside. But I would aim, if I would be in a long trade, I would aim here to 1.3%. I still have a smaller long position from yesterday because I went long here at 11,750, so not at the lows, but here when I saw that we will go higher again, 11,750, I took a smaller long. I pulled out here 12,000 half position size, and the rest I've still open. So I can profit when we go higher, but I expect the market to drop first, maybe 100, 150 points if we come in with 6.1 or 6.2%. But like always, I wouldn't trade my expectations. Never trade expectations, always trade the outcome and the direction. and not what you are expecting the market should do, because it can come completely different. So news are out. Let's see the news and let's see the market reaction here. So it's going higher and lower. Already moving, dropping like expected, first dropping. So the number came out in 6.0%, in line with expectation. Wow, perfect, perfect. Core CPI a little bit higher, 0.5%. Okay, that's okay. Everything in line, and core CPI a little bit higher. But the Federal Reserve can do nothing about core inflation. That's the key point. So forecasts were good. Perfect. That's pretty good for a rally. So let's see. So this was a drop of 150 points like expected. And yeah, if we can manage to hold it at 12,000 level now, we should see a rally to the next targets here on the upside. This is a good CPI, I think. We can probably see further up moving here. Because, yeah, Federal Reserve bailed out the banks. It was like, I can remember back in 2012, when Mario Draghi, the president of European Central Bank, went out and said he's the lender of last resort. So he said, whatever it takes, the European Central Bank will do it to save the euro. And that's what the Federal Reserve did yesterday, or the day before yesterday, even Sunday evening. Because they said, we will secure all deposits. So you don't need to go to your bank tomorrow and to take off all your deposits of the bank. So this is what they did. We will save the US dollar, whatever it takes. We will save the banking system. So retest of the highs almost reached here. So this is the first attempt. We normally need 2 or 3 attempts to go above. This is a bigger resistance. As you can see here, we had the highs yesterday and the highs on Friday. So it is a bigger resistance. We won't go above on the first attempt. It needs some time to bounce between 12,000 and 12,080 until we can see higher levels. Maybe it will take 1 hour until the US opening, but probably we will see higher prices because, yeah, numbers are pretty good. If they are just in line with expectations, that's really perfect. So, to your questions, are you in a Nasdaq position? Yes, I said I'm in a long position right now. It's just a small position for my portfolio, but I'm in a long position. I entered at a very good price, I think, and already taking out half profits yesterday. But I think there's more room to the upside, minimum 12,300 here, to this Fibonacci level. Maybe even retest the previous highs from Thursday. These highs were at 12,353 points. What was CPI? CPI was like the forecast, 6.0% here, 6.0%. Core CPI at 5.5%, like the expectation. So no change here, just the core CPI month-over-month number is a little bit higher, 0.5%. But that's okay, because Federal Reserve can do nothing about the oil prices and the electricity and food. So they are changing a lot. So that's okay, that's almost in line here with the monthly number. That's perfect. So inflation is coming down. We'll see disinflation. It's not a deflation because there's still too high inflation number, but it's a disinflation because the previous number was higher. As you can see here, 6.4% was the previous number, and we are going down to 6%. So the inflation speed is slowing down, and that's what the Federal Reserve wants to see and what the market wants to see. And that's good. That's good. That should bring down the inflation expectations and therefore the interest rate expectations. So we will. I don't think that there will be a big shift here for next week, but yeah, it's in line, and therefore probably we will have the decision between 0 interest rate hikes or 25 basis points move. But that's good because the market doesn't like fear, and therefore now we have security again, the safety. Where's my VIX chart here? VIX here. So not on a 1 minute time frame. Let's see the daily first. We went to highs yesterday of 30.8, and we are dropping now back to 25, but it's still a high level. As you can see, last week we had the lows here on March 3rd at 18.16, and then we went higher. It began last Thursday Friday, Monday. So the fear was rising and rising. But you see that we had also big shift within a day. So we had high points here on Friday of 29, but until the end of the day we went down to 24.8. On Monday we made higher highs, but at the end of the day we closed at 26.5. So you see there are big shifts. It's like in a roller coaster because people don't know anymore what it is, what the market is about, because everything was turned upside down with these news. And now they are trying to figure out if the prices are cheap and if you should just buy it, especially long term, or if you should wait because we will see even lower prices, and it's difficult to figure out. So my expectation is it is, in a long-term sense, it is cheap, especially if you wanted to buy in, for example, in Charles Schwab, because Charles Schwab is a big bank. I don't think that, and a big broker, I don't think that this one will go bankrupt, especially with the new rules from Federal Reserve, so they can get money on an easy way to stay liquid, even if they have a big portfolio in longer-term bills and notes of the US government. Therefore, yeah, they are sitting on big losses here. But yeah, they can just wait until majority, and it's not a big issue now for them. It is cheap. The stock is cheap now. Let's see Charles Schwab. Let's see the banks first here. This is Silicon Valley Bank. The trading was halted on Friday before the market opened here at a low point of 39.40. But probably this one will open as a penny stock below $5 and soon go to zero, because there won't remain any value within this shell here. So yeah, it's just worthless. The same for Signature Bank here. Signature Bank was halted yesterday pre-market already, so there's no value in it anymore. But for the other banks, there is still the possibility that they can go back in value. So let's see Schwab. So there was a shift yesterday. It's an interesting candle now on a daily time frame. If you look here without the outside regular trading hours, then it's more interesting to see, because we had this downshift here Thursday, Friday, and yesterday we made lows of $45, but we closed at about $52. And you see this is a nice doji candle, and you see pre-market we are already back at 57 just to close this gap here, and it can go higher again. This is a really nice candle indicating change of direction. And you see the implied volatility here. It's just crazy. If you would have traded options, you would have made big premiums here, or you would have paid big premiums if you would have bought options. So I'm an option seller. Therefore, it's more interesting to sell options when there's high implied volatility. But now you see, you can get, you could have get Charles Schwab for the same price like back in November 2020. So it was pretty cheap here, and price earnings ratio is really low, or was really low and is still low. So it's interesting. I'm not saying buy into Charles Schwab, but no investment advice like always. But it's interesting to see how fast these drops happened here. This is 41% for one of the biggest brokers of the United States. It's just crazy. It's just crazy what is happening here. But it's not over yet. It's not over yet for the banking system, because there's still fear and people are still pulling out money, especially out of the regional banks. And the banks who don't own notes and bills to hand in to the Federal Reserve to get 100% of the notional value, they have still the same issues. They can be illiquid, so, and they can run out of liquidity. That's still the same issue. So if they have no mortgage-backed securities or other papers, then that's still the same problem. Let's move on with natural gas. Natural gas was interesting because we were pulling higher yesterday, about 6.5 to 7% from the lows. And we are trying to push back to the $3 area. Let's see if this was the low now. I talked about it last week that we probably will retest the $2.50, and we almost did. $2.5014 was the low point here. So now we should retest the $3. Let's see, there were already big moves pre-market today here. But yeah, for sure the $3 area will be resistance again, and a probable test here. Let's see where my short puts with $2.25 strike will end. Then they are in the green right now already. Crude oil was really interesting. We had big moves. Look at this. This was an intraday move of 7%. This is crazy. And if you go out here, you see, where did we stop? Look here. This was previous low point, and we stopped at the low point. So this would be an interesting level to go long here, but unfortunately, I was watching a lot of other things, therefore I hadn't had the time here to enter a long trade in crude oil, but it was a really interesting level here. And yeah, let's see if we will retest, and if we retest and we try to go below, then there will be more sell-off, because this time it won't hold anymore. If we retest again, it's now the third time. This was the first time, second time, third time, and the next time probably we will see the breakthrough if the crude oil prices will stay weak here. It's interesting, but I have enough other positions, especially with natural gas here, therefore not in a position right now. Gold was interesting. Gold was rising fast. Why? Because of the lower interest rate expectations. And you see, in the previous 3 days, gold rose 5.5% because there are less opportunity costs. We were talking about this in the previous live streams. And when the interest rate expectations drop, then of course we will see a rise in the gold price again. Like the opposite here, we had a rise in interest rate expectations. Therefore the gold price dropped heavy. And this turned like the same with the prices of the notes and bills from the US government. So the bond prices are going crazy, gold is going crazy, the market is going crazy. Who is not crazy right now? Back to Nasdaq. What is it doing? Still bouncing between 12,000 and 12,073 was a high. So we go back to a 5-minute. I don't think that there will be a big thing here. It just will take time, and we need more volume to see this break here. But probably we'll retest soon the high point from yesterday, and it should be bullish. This inline outcome of the CPI should be bullish, so at least we should not test the lows of yesterday unless there are really bad news, but there's nothing on the table for today anymore. So let's see the next important news for this week, because we have more to come. This week here, because we have more to come tomorrow. Tomorrow we will have PPI. So after one inflation number, the next inflation is coming already in the next day. Producer price index tomorrow, also 1 hour before the market opens. So this is just my time, 1:30 p.m., but it is 8:30 a.m. Eastern time. And we will see on Thursday initial jobless claims like every week, Philadelphia Fed Manufacturing Index, building permits, so a lot of news again, and also from the ECB with the ECB interest rate decision. So we in Europe here, we are at 3%, and the expectation is to go up to 3.5%. But yeah, it will be interesting to see if they will still go higher by half a percentage point, or if they say, okay, we will probably also get into trouble with our banks, therefore maybe we will go only by 25 basis points. But our inflation rate is a lot higher than yours, so we have more than 8%, therefore we should go by half a percentage point. Yeah, but it will be interesting on Thursday as well. And on Friday we will have the European CPI, so for the Eurozone, Consumer Price Index, and only 2-star events in the US. But it is a week with a lot of news, so it will be interesting. I will have a one-on-one coaching at 2 p.m. my time tomorrow, but I will try to live stream PPI, of course. So probably at 8:15 a.m. Eastern, I will live stream again for maybe half an hour, and then close this live stream just to see what will happen on PPI. But normally CPI is more important than PPI, and I don't expect a lot of movement for PPI. Because CPI was just in line today, then probably we will see about the same for PPI. But sometimes PPI numbers are fluctuating more than CPI, and therefore there can be bigger misses with the forecasts here of PPI. Then crazy is normal. Yes, Ralph, correct. Sometimes the stock markets are going crazy, but sometimes this is just normal for the stock market. So I wouldn't expect something else from the stock market in this situation. So if I look back to the previous days, then I would say this movement was just normal, yeah? It wasn't something special to see a 400 points move in just 1 or 2 days here in Nasdaq. With these news, there could have been more, especially when the Federal Reserve wouldn't have gone out and said, yeah, we will save everyone, bail out everyone. The funny thing is, Janet Yellen was going out and saying, no, we won't bail out this time. And then the Federal Reserve was coming in saying, okay, every deposit is secured from every bank in the whole US. And they are not allowed to do this. Normally, the Senate and the House have to decide this by government rule. So it's not possible just to say for the Federal Reserve that everything is secure. That's not possible. But if everyone trusts the Federal Reserve and doesn't pull out the money anymore, then it's good. Then it's good. Okay, the market has been pretty choppy. Okay, only day trades. Yeah, but sometimes it's even more difficult to day trade than to swing trade, because if you take a small position for a swing trade and you place your stop loss a little bit more far away, then it's sometimes easier because you are not triggered with your stop losses on these heavy moves like yesterday. Yeah, but you can make big money. If you are really capable of day trading or maybe scalping, then you can make big money. These are great times for day traders if they know what they do. Of course, it is difficult in certain circumstances to trade this, but if you are knowledgeable, if you know what you do, then this can mean big money for you. How many snowflakes have you seen today? Snowflakes? No, there's no snow, Mirko, outside. It's not this cold. It's 10 degrees Celsius outside, Mirko. Of course, I don't have 30 degrees like you in Thailand, but it's 10 degrees. It's okay. It's just windy. There was a big thunderstorm yesterday. We had heavy rain and a big thunderstorm with lightning. But today it's okay. It's just windy. S&P not moving much. Yeah, let's see ES future, but it should be about the same like Nasdaq. Where's my ES future here? Too many charts open here. No, it's not here. Okay, then just lose this one for ES future. Futures. June future will expire on Friday. We were already talking about this last week because we will have the monthly expiry. Therefore, it's called triple witching day, because all the index futures and the index options and the stock options will expire this Friday. Therefore, there will be a big expiration. Therefore, we call it triple witching day, because like the witches are dancing around the fire, the prices can dance this week to find their final settlement price on Friday. Yes, yeah, it's just going higher now, but as you can see, it is a lot weaker than the Nasdaq was, because yeah, the savings and the deposits were saved was a big thing for the tech stocks, because a lot of tech companies had deposits at the Silicon Valley Bank. So I will redraw this one. And yeah, therefore this were good news for the tech companies. But you see, we're still trading far below the 50% retracement here from the previous down move. So there's even one more level we had to go above before we can go back to the 50% Fibonacci. And then we will have the psychological 4,000 level. So it's more difficult for the ES because there are more smaller companies. And when there's fear in the market, then most of the times the smaller companies are sold off first. And this is what happens here with S&P 500, because there are 500 companies, and we see the sell-off even more than in Nasdaq 100, because they are only the 100 largest tech companies. And because Silicon Valley Bank, or the deposits of Silicon Valley Bank, were saved, then this was something good for the tech companies. And therefore we are at higher levels in Nasdaq compared to S&P 500. So we are near the 50% retracement from the previous down move. As you can see, this was the previous down move here, and it was a down move of 6 and 6.4%. And now we went up already 2.9% of this previous down move. But there's more to come when the market opens in about 40 minutes. Can we short Deutsche Bank? Yes, you can. You can, but I don't think that's a good idea now. Just wait for more trouble to come up and don't short too early. Okay, so let's see one of the biggest banks here. Bank of America was dropping. As you can see, the volatility is still high, but we already managed to go higher by 6.7% from the lows of yesterday. So maybe they can recover this week if the fear isn't coming back to the market. But it will depend on the decision next week for Federal Reserve. Let's see FedWatch tool again, if there was a big shift, but I don't think that we will see again. 86% now for the 25 basis points. Yeah, this is what I was expecting. So interest rate expectations were in line. There's PPI to come tomorrow, but 0% move, no. It's just, no, the central bank cannot do this. So then they would say, okay, we will give up on fighting against the high inflation. And therefore they have to go by 25 basis points. Under normal circumstances, when the previous time when the Federal Reserve lowered the interest rate levels back in 2018, there was something comparable, because the Jerome Powell was saying, okay, we have to lower the interest rates now to give liquidity to the banks. And the same thing is now. They will have to give liquidity to the banks, but they cannot lower the interest rate because of this high inflation level. And therefore, this is more difficult to handle it now with higher interest rate levels. And they cannot go down. They cannot lower the interest rate levels right away. And therefore, they found another solution with the bonds. So they said, okay, you will get 100% of the value of the bond, not the value you traded at the stock exchange right now, but the value you will get at expiration, so at maturity. This value you can get as a loan and as credit. So yeah, and it's secret. So the central bank will not tell to everyone who had taken these loans out for their bonds, so that there is not fear coming up. And this will happen for the next year, so there's a lot of time, and then they can still go longer with this. But for now, it's for 1 year. And yeah, let's see the probabilities for this year, because there was a shift. So we see this is not the last interest rate hike which is expected. So for May, the market still expects to go higher at a peak of 5.25%. But now we see the shift. Last week, there was no expectation of an interest rate, of lower interest rates for this year, not before January or March next year. And now you see there's already the expectation of 80% for lower interest rates in June. So from the high point to June, 80% probability. Then again, 25 basis points move down in July, and then in December again. So that we will be at a lower interest rate level than where we are right now. We are right now at 4.75%. And the expectation is to go to 4.5 at the end of the year. So you see this big shift in expectations. And this is why the bonds were going crazy in the previous days, because of this big shift in expectation. Therefore, the bond prices went up and the treasury rate here went lower. Let's see if it's the truth, but this is what I was talking in all the previous 4 to 5 weeks. I was saying I'm not expecting that we will stay at these high levels for the whole year. Because of the recession, the upcoming recession, even without this banking news, the recession will be worse than expected, and therefore the Federal Reserve will have to lower the interest rates. There's no way around this. There's no way. Because inflation will drop fast now. It will be difficult to hold it near the 2% where they want to have it. But the interest rate level cannot stay here at these high levels. It's just too high for the economy. Yeah, it will be interesting to see where the market will open and where the market will push the prices today. We are still trading between 12,000 and 12,100 right now. So it's not interesting to watch, but I wish you a nice trading day. I hope you will have a lot of profits today, and we will meet tomorrow again for PPI news. Hope I could give you some insights. If so, then please give me a like for the stream. And if you haven't done so far, please subscribe to my channel. A lot of you are asking why I don't have any Discord server or any English spoken Discord server. So I said I will open one as soon as I reach 1,000 subscribers for my channel. So please subscribe to my channel, and as soon as we reach the 1,000K or the 1,000 level, 1K level, then I will open a Discord server for you to provide even more infos besides my live streams here. Thank you for watching. Wish you a nice trading day and happy profits. We will see us tomorrow. Goodbye.